Many of you saw my Square video around 6 or 7 months ago whenever they acquired Afterpay, I believe, and now the stock is at $51, down over 68%. Now, in my video before, I was not bullish on Square. I did not like their acquisition, and I mentioned if I had to choose between PayPal or Square, I would choose PayPal stock. But I don't own PayPal and I don't own Square. So I thought it would be a good video to make and to revisit the thesis as the stock is down so much, and I was bearish before. Maybe the valuation right now actually kind of justifies any kind of bad news with Square stock. So I'm going to take a deeper look into the fundamentals, into everything that happened, and determine if Square is a good buy right now at around $51, or if we should maybe wait for a better price. So again, I hope you enjoy this video. Now, going into the latest earnings report, and if you look at the earnings presentation, you see a lot of green, and you see the revenue is pretty much going up everywhere. The Square gross profit is up, 29%. The Cash App is up 29%. And you see all this massive revenue growth. And you would be kind of thinking, oh, that's amazing. This is really amazing earnings for Square stock. But we have to really think about where this growth actually came from. Okay, this is what they said in their earnings report. The gross profit grew 29% on the year. Excluding the buy now, pay later, it would have only grown 16%. Okay, this is the Cash App ecosystem delivered a gross profit of $705 million, an increase of 29% year over year. Now you might say, oh, that's pretty much amazing. But again, excluding our buy now, pay later, it's only 15%. So Square is not really growing as much as you think, in my personal opinion, and this is a big trap that many investors are falling into. Okay, but taking a deeper look at their buy now, pay later platform, which is Afterpay, it contributed $208 million of revenue and $150 million of gross profit. Okay, now how much did they pay for this acquisition, if you remember? $29 billion. $29 billion just to get $150 million of gross profit? This is really pretty bad. I would not personally invest in a company with such management from the first place. I mentioned many times that Square overpaid for Afterpay. They FOMO'd into it because they saw the industry is growing fast and they were trying to kind of fit in the industry, so they acquired Afterpay, and they really overpaid for this acquisition. I really liked what PayPal did. They started their own kind of buy now, pay later, which was pretty smart. Instead of just wasting $29 billion just to make $150 million of gross profit. And even if this grows in the future, I don't believe it's going to justify the $29 billion valuation, which has been a lot of dilution and a lot of money wasted in terms of shareholder value, in my opinion, with this acquisition. And in general, I am very bearish on the buy now, pay later. I think as we go into recession, if there's no stimulus, there's no Fed bailout, many of those kind of things are going to go to zero. I'm not saying Afterpay is going to zero. Maybe Affirm is going to zero. Maybe other kind of buy now, pay laters are going to zero. Because a lot of consumers are going to default. Many of them are loaning customers with little to no credit score, and they don't even have a late payment fee. And a lot of people, I saw the data, they are starting, to experience some delinquencies. People are starting to being late on the payment. So I'm very bearish on this industry in general. And again, I believe Square overpaid for the deal. Okay, now looking at their income, the balance sheet, it's really not bad at all. They have around $12.5 billion of current assets. Current liabilities only $6.9 billion, which is very good. The long-term debt is around $4.1 billion. But I don't believe this is very concerning, and I believe it's good that they actually have that much debt because it's secured at a very low interest rates in terms of convertible notes. I mean, less than 50 basis points, 93 basis points, 66 basis points. This is an extremely low interest rate that Square has on those long-term debt, which is again not really bad at all, and they are paying it off. They paid off more than $400 million from the previous year to now, so they're doing pretty good on that, and I don't believe that that is a problem in this case. Okay, now looking a little bit kind of deeper into the whole thing, I did not go in the income statement, but this is what I really want to show you, that there is a lot of uncertainty with determining the valuation of Square. mainly because the operating margins have been all over the place. Why? Because they've been spending a lot on research and development. The research and development has been pretty much skyrocketing, which kind of tell you something about the business. That yes, maybe they are trying to invest now so they can have more net income in the future. But in the same time, you could think about it is that if they don't spend a lot on research and development, maybe they cannot really compete with other type of players. Yes, they have Cash App, which is pretty amazing. But again, PayPal and other type of providers, they also have a pretty big advantage over Square, in my personal opinion. So you could see the fluctuations in the operating margin, which really makes the valuation uncertain. Another thing that makes the valuation uncertain, which I'm going to talk about before I go into my valuation model, is the PE ratio. It was at a mean of 123, which I believe is extremely expensive. And now it went down to around 45 PE. And I still believe it's extremely expensive for the stock. I don't believe Square can grow more than 15 to 20% per year. And a 45 PE to me is expensive. I believe PayPal is trading at 18 PE. So again, this is another thing that gave some uncertainty to the valuation. So as I talked about those things, we talked about all the bad news with Square, maybe the valuation in terms of the gross revenue and net income margin can actually justify this type of bad stuff, and we could actually maybe make some money on Square stock. So this is what I'm going to talk about now in my valuation model, okay? They made around 17.5 billion currently. I put the revenue growth around 15% every single year for the next 5 years. Now, the analysts on Wall Street, they expected between 14 to 17%. Now, I believe even 15% could actually be a little bit on the high side for Square, despite the bad macro environment that Square is facing. And this is not going to fix itself anytime soon. We're going to have this problem in 2023 and in 2024 in terms of lower spending and a lot of things, in my opinion. Okay, and a lot of, they made a lot of money on crypto investing, and now not many people want to touch Bitcoin. So the Cash App is not really generating much revenue in terms of this area. But I believe 15% is a fair number, and this is pushing it to the high side. Okay, now this is another thing I also had trouble with, and this is the net income margin. I put it at 10%. Why did I choose 10%? Because, they had a pretty, again, fluctuating net income margin as they were spending a lot on research and development. And I don't really know how much more they actually going to spend in the future and advertising and stuff. But Square used to earn high margins between 11.5 to 16.5%. But after, they spending more research and development, they acquired Afterpay, which Afterpay has a little bit lower margins. Their margins dropped to 5% for net income margin. And the analysts are assuming they could go up to 7% in 2025. But again, I pushed it a little bit higher than it is, and I put in 10%, which means that over the next 5 years, Square is going to double its net income margin, which is, again, on the high side. But you're going to understand why I'm actually doing that. Okay, so now it's 5% net income margin. I'm going to use 10% net income margin. And a 20 PE, which is, I believe, is fair. I don't think you could argue that, Square is going to be trading at 40 PE 5 years from now. And you have a company like PayPal trading at only 18 or 17 PE. So I don't believe Square is going to trade above 20 PE. Now, using all those numbers, which I said they are on the high side, you only get an upside of 130%, which is 18% compounded every single year for the next 5 years. Again, this is not bad at all. But if you take what's in my valuation model, which is a 20% margin of safety, is mean if something goes wrong or if the numbers were lower than expected, you take off 20%, you only end up with 84%. Meaning you can't even double your money over the next 5 years safely with a company like Square. Why am I using the margin of safety? Well, because there's a lot of uncertainties in terms of the macroeconomic around the revenue, around the net income margin is only 5%. It could remain 5%. If the net income margin, remained 5%, the upside would only be 15%. Again, I don't believe this is going to happen. But I mean, you see what I'm trying to say. There's a lot of uncertainties with a company like Square. And I don't believe, to be honest, Square is a buy right now, despite the stock being down so much. It's trading now at a market cap of around 30 billion. Now, assuming all those numbers and they actually maybe come true and you could get Square for maybe 20 billion instead of 30 billion. Now the upside is around 241%. And if you use the 20% margin of safety, it's only 173%, which is again amazing, over, close to 28% compounded, every single year. So that would be an implied of a price of, I believe, $30 per share. So I believe if Square goes around $30 or $35 per share, I believe it could be worth a risk reward for investors who likes to invest in this type of company and in this type of industry. But for me, currently, even though Square is down over 68%, I still believe Square is not a buy. Again, I haven't looked into PayPal recently, but I believe PayPal would be much cheaper than Square as it went down too. So again, Square is not a buy. If it goes to $30, $35, it could be worth a risk reward, but right now it's not a buy. So I hope you enjoyed this video. If you want to learn more and kind of learn on valuation models and how I do them and learn valuations and stuff, you could maybe feel free to join the Patreon group. We have a Discord group and we help each others in terms of, learning options. We do valuation models. We do a lot of trading in this market crash. We do a lot of things. So if you're actually interested in that, check out the link down in the description below. And if you enjoyed it, please consider subscribing, maybe press the like button, and I hope to see you in another video.